Hey everyone, PayPal is scheduled to report second quarter 2024 earnings results before the markets open on July 30th. Of course, PayPal has been one of my top recommended stocks to buy in 2024, so I know a lot of my viewers are interested about PayPal stock. I'll preview what PayPal stock investors should look for from the company in its upcoming financial release, and I'll answer if investors should buy PayPal stock before the earnings release or wait until after to purchase shares of PayPal.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So one of the big items for investors to look for from PayPal is how the new CEO is progressing on transition plans. Of course, Alex Chriss, the new CEO, said that 2024 remains a transition year, and we are focused on execution, driving our key strategic initiatives, realizing cost savings, and reinvesting appropriately to position the company for consistent, high-quality, profitable growth in the future. So, in my opinion, the CEO saying all the right things, doing all the right things to put this company into a better position. PayPal is not a fast-growing company anymore, and the company has long since stopped talking about reaching 1 billion active accounts. Remember, the previous CEO had talked about that. Now they're focused on profitable growth. They're not just looking at increasing the number of people that use PayPal, but they want to increase the number of profitable customers they can serve. PayPal cannot serve every single customer profitably, and a focus on more profitable growth should be better for investors in the long term. Net revenues increased by 9% in the latest quarter to 7.7 billion. And the company is forecasting continued revenue growth in the second quarter. And the data that I've seen between financial reports from PayPal suggests the macroeconomic activity working in its favor. What I mean by that is PayPal benefits when people spend more money online. And in the recent year and a half or so, I want to say 2 years, people have been spending less money online, reversing the trend from the COVID era when people were spending so much money online. So PayPal benefited from that initial surge when people were spending more time at home, spending more money online. And then as economies reopened, that trend reversed for PayPal, and it worked against it because then people were unleashing this pent-up demand to get out of the house, spend more money at restaurants, at theme parks, and travel, which does not work in PayPal's favor. PayPal doesn't have as strong an advantage when people are spending money in person. And so that trend was working against it. Now it's normalizing, right? So first we had too much online spending, not enough in-person spending in 2020, 2021, 2022. And then 2023 was too much in-person spending. And 2024, it's reaching about a peak. And it's normalizing where now people are reversing and spending more time at home, spending more money online again, spending more money on things and less money on services. And that trend, that normalization will work in PayPal's favor because that's where it has more advantages. That's where it generates more transactions, and that's where it generates more profit. So operating income for the quarter increased by 17% to 1.2 billion. You can see here on 7.7 billion in revenue, they generated 1.2 billion in operating income, with the operating profit margin expanding by to 15.2%. The company generates reasonable profit margins for its business model. Now, it's nowhere near the profit margins of companies like Visa and MasterCard, which generate profit margins closer to 60% and above 60% for Visa. But PayPal has the potential to have a higher operating profit margin. The business model is similar in nature in that it does the work to build the network to have buyers using PayPal, which then encourages merchants to accept PayPal, and then it builds on it because it's just a positive virtuous cycle. The more people that use PayPal to make purchases, makes merchants more interested in accepting PayPal as a payment method because they want access to all those people that use PayPal. And so that just builds on itself and it grows to become a very lucrative business model if you can expand it. As it is, PayPal has roughly 400 million active accounts, and that's about 1/10 of Visa, where there's over 4 billion Visa cards outstanding. So Visa generates operating profit margins over 60%. And so you can see the potential. I don't expect PayPal to ever get to that point where it gets to 4 billion active accounts, but you could see the potential as you increase the number of active accounts, the more lucrative the business model becomes, the more network effects start to benefit the company, and the more profit the company can generate. So the potential is there for PayPal longer term. So in the first quarter, total payment volume increased by 14%. Payment per transacting active account on the trailing 12-month basis increased by 13% to 60. Now, that was even tough to say for me, but the important part of this metric is what I talked about in the beginning of the video. Remember how I said PayPal is more interested in growing profitable accounts and less interested in just growing the number of accounts? This is demonstrated in this metric. The payment per active account increased by 13%, meaning as PayPal shed some of their less engaged customers, their payment per active account increased, because now the accounts that remain are those that are using PayPal more frequently. And so PayPal stopped sending promotions and incentives to get those less active customers engaged, because they just used the account when there was a promotion and then they didn't use it when there wasn't the promotion. And that's not a very profitable customer. It's kind of like me and DoorDash. I only use DoorDash when they send me a massive coupon offer like $40 off an order of $50 or more. So I'm not a profitable customer for DoorDash. I only use it when they send me a promotion like that. And it's not lucrative for DoorDash to keep sending me those promotions, because I'm just going to use it when they send me that promotion. I'm not going to generate a profit for the company. Similar here, PayPal not going after those kinds of customers that are not going to be profitable, that are only going to use it when there's an incentive or promotion. And finally, one thing I was very pleased with PayPal in their previous quarter is that on a sequential basis, active accounts increased by 2 million. They were on a streak where, because of that strategy, they were just going after profitable customers. They were losing a lot of customers because they stopped engaging those less active customers, and so those were not engaging with the platform any longer. But finally, they turned that around. Even though they stuck with that profitable growth strategy, they still added 2 million accounts. And this is more valuable than having a 2 million account addition without the strategy of going after profitable customers. Investors can be more confident that these 2 million customers are more quality customers than would have been added maybe a year and a half ago, where the company wasn't as focused on profitable growth. All right, so for the second quarter, the company is forecasting net revenue growth of about 7% at the midpoint, and for non-GAAP earnings per share to grow by low double-digit percentage compared to last year. Now, for the full year, the company recently increased its guidance. It previously said that they were expecting flat earnings for 2024, meaning zero growth. And then after the first quarter, they upgraded that to say they now expect mid to high single digit percentage earnings per share growth. So mid to high single digit would be something like 5, 6, 7% growth in earnings per share for 2024. I wouldn't be surprised if PayPal upgrades this target again following the second quarter, given that they expect low double-digit percentage increase in non-GAAP earnings per share in Q2, and given the macroeconomic environment is working in its favor and the normalization of consumer spending habits is working in PayPal's favor. So PayPal stock is trading at a very cheap valuation, a forward PE of 12.74, near the cheapest this stock has traded for going back more than a year. You can understand why I've had PayPal stock rated as one of my top stocks to buy in 2024, because the metrics look solid, revenue growth is solid, earnings per share growth is happening, the new CEO seems to be making all the right moves, and so I've liked PayPal's prospects, I've liked the return versus risk for shareholders. Now, I feel this stock is undervalued enough where you can buy before earnings. I think it is a buy before earnings, but you can also buy after earnings. I don't think the stock price is going to jump by all that much following the earnings release. As I highlighted, I'm expecting a reasonable chance of PayPal increasing its profit forecast for 2024. I know other analysts are also expecting a potential increase in the earnings per share forecast for 2024. I'm not the only one that's seeing these trends for PayPal, and so those positive prospects have likely already been incorporated somewhat into the valuation. So I don't think there's going to be like a big 20 or 30% stock price increase after earnings. So it's depending on preference whether you want to buy before or after earnings. I think it is a buy, whether it be before or after earnings. And if you want the lower risk decision, then you can split up your purchase and do half before earnings and half after earnings. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.